Hey traders, welcome back to a new educational video here on the channel. Today I want to make a quick video talking about a very simple strategy, price action strategy that I like to use when I am trading. This is something that can be applied on all time frames, on all markets, and is basically the use of a trendline breakout strategy. So first, let's just start off with some very general terms and theory. Obviously, what do we need to draw a trend line? Well, we need two swing points in order to draw our trend line on those two swing points. Now, when I identify two clear points on a trend line, then I'm very aware and paying attention to a third touch. Usually the third touch is going to be the confirmation touch, and we're going to observe some kind of reaction. But after the third touch, if I see that market keeps coming back, and in this case we're making higher lows, coming again into that trend line, then I start really paying attention for a possible breakout. And of course, I look for volume confirmations on the bottom, other signs, like important levels. I look to see if we are breaking out or accepting within a high volume node and other things. But the main point of the strategy is just to look for a clear breakout on a trend line when we have at least three clear touches already on it. Okay? Now, another part that is important to note, and one thing that I like to use when we have very extreme trending markets where it's just a very, very strong trend, I use a lot of trendline breakouts just as a means of a entry on the market, because the problem when we have a very strong trending market, and let me actually put a VWAP here, and let's put in the deviations. Let's put in the first and second deviation. This is trading view. I'm just using the anchored volume profile tool, which you can find right over here. And that VWAP is one of the main tools that I use when it comes to day trading, because it's basically like a moving average, but it's taking into account traded volumes as well. So you can see here, this is something that I talk about in my courses, and I've talked about it in the VWAP videos here on my channel. When we have a very strong trend day, market is going to tend to stick between the first and second deviation. When we have more balanced days, like for example, a session like this, if I put a VWAP here, this is extended hours, this is a NASDAQ chart, you can see when we have a more balanced day, market is just going to chop around and through the VWAP a lot. But when we have a clear trend day, VWAP is going to help us to be able to track the market. And you can see how on a strong trend day, we're following VWAP very close. We're within the first and second deviations a lot. Now, the problem with trend days is you either try to chase at the worst moment only to have it quickly come back to you. Like imagine if you were market buying here, thinking it's going to continue, and then you have this quick drop, and if you're trading minis or any kind of size that's like a, a decent sized contract, this is probably most likely going to stop you in a move like this if you don't have a super wide stop. The other problem is that you're left waiting for pullbacks that never happen. Like for example here, we have a very clear resistance level, market broke out, so you're saying, oh, this would be a great area to wait for a pullback. But then you can see when we're in big trending markets, we don't get a lot of this deep, nice pullbacks, even if you're using like Fibonacci's, you're waiting for some kind of pullback into the 61.8 or 75, etc. When you're very strongly trending, you're not really going to get those deep pullbacks. So using a simple breakout strategy, this is the 5-minute chart. Let's just go into the 1 minute. This is 29 October. So if we go back to this trending day, which was this one here. So this is the same chart on a 1 minute. Then here is where I would look for bull or bear flag formations in order to look for breakouts. Okay, so in this case you can see here, little one here, and yeah, well, there's a little small one over here as well. So you can see how in this case, when it's a bullish trending up, then I will look for market to start coiling and forming a trend line, and then just 1, 2, 3, and then once we start coming back again after 3 touches, that's when I really pay attention. Now sometimes it takes more, like you can see 1, 2, 3, 4, 5, 6. This broke out on the 7th touch, but the main thing is the lows. We're continuously making lows. We did this one, we did dip lower than this, and then we came back, but you can see, you can tell there was a lot of momentum on this pullback again. So this was very likely that we would see a breakout. If we put the volume indicator, we can use this also as a guide to look for high volume breakouts. So in this case, like for example here, you want to go down, and in this case we see that the buying volumes that we have here are tending upwards. This is confirming that there is more buying interest right when we come up into this breakout point from this. Here's an example in the gold futures market on the 1 hour time frame as well, for example. So this can be applied again on all time frames for swing trades, day trading. You can see this was a new all-time high that we had made last month. Then we come back, we close the day up here, gap down, then we come back, and then look, all this accumulation here right underneath the trend line, and then we have a big increase in buying volume right towards when we're coming back into it for a fourth period now. And then we have a very nice break to the upside, and you can see also consistent higher lows being held and market coiling up to this release point over here. And obviously the trend in this case is tending to go upwards. We zoom out here more. You can see same thing. You can clearly make out here that we also had a significant trend line right over there. Now with trend lines, this is a concept I've talked about in the courses and on YouTube before. There's what we call outer and inner trend lines. An outer trend line here would be right here, where I am using the most extreme points of price. Now, what is the problem with the outer trend lines? A lot of times you're going to miss a lot of earlier signals. So I do like to use trend lines by the most confluence of hits. So for example, here we can see that first we had this two hits here. So we had the trend line A and point B. This was the confirmation. And then you can see we did overshoot it a little bit. We came back down and then we touched it again. So even though we have this overshoot here, you can see how we keep respecting it here very well. We pretty much touched almost on this. And if we keep pulling it further, you can see here. So this is what I would call an inner trend line, because even though we have this overshoot, we're taking the most confluence of hits that are happening right inside. And then you can see here just a breakout and two very nice retests from the other side before we just continue going. Here's a Bitcoin chart, 5 minutes, and this is a nice example of, we open up this day, and well, first of all, you can see we had a clear trend line here that we actually had a very nice 1, 2, 3, and then we came back and broke on the fourth. But then up here, we keep going up. We have this very nice breakout. We break above this high, this high, this high. So we're shifting structure up. But then coming down, well, the first area of support we're looking for would be right here, which ended up being the bouncing point. But I would also be looking at this a lot, thinking, okay, we'll probably might come down and test here before we go. But as you can see, we don't come that far down. But then using the trend line strategy, you can just start forming this. And again, a lot of this are very basic bull and bear flags or rising or falling wedges, pennants. You know, it's very basic trend lines. But like I said, for me, when I keep seeing the market coming back and testing, especially in a fourth touch, that's when I really am looking for a breakout. And you can see right here, we had the big move up, a nice symmetric pullback down here, and then again, the breakout right here on the fourth touch. And you can see this was a pretty strong trending day. You know, here you could even go and apply. This is a pretty steep trend line. But again, you can see right here, it had this, 2, 3. and then we came on a fourth back test, and then we continue going. Okay, so that's pretty much in essence the basis of just this very simple trend line breakout strategy. Identify and get in line with the trend, and then just look for flag or channel formations, and pay attention after you've had the third confirmation touch. If price keeps coming up and holding higher highs or higher or lower highs or lower low structure depending on the trend, then look to get in on the breakout movement. And also it is going to let you have a pretty set risk parameter as well. Okay, so that's pretty much it for the video. Hope you've all been having a great week, and I'll see you in the next one.